You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the old OptionsInsider.com, the ever faithful, ever popular online source for all sorts of free options information. A lot of you guys made us listen to the shows, but there is, of course, the great website over there as well. You can surf over, get all kinds of unusual activity alerts, educational articles, analytical articles, breaking news from the options market, the whole 9 yards, as well as access to all of the fine programs on this here Options Insider Radio Network. Where else can you find those programs? Well, of course, iTunes, Stitcher, Aha Mobile, TuneIn, wherever you like to find your fine programs. And as always, we've aggregated them in one nice, easy place for you. That is our Options Insider Radio Network mobile app, available for all of the iOS devices and the Android devices, and even that growing thing they like to call Fire OS. You can listen to all of our favorite programs. You can stream them instantly wherever you are, wherever you have any bars on your phone. You can listen to the network. You can download some shows for offline listening. I just did that last week when I was on vacation. I was driving around to some areas where there wasn't a heck of a lot of signal. I wanted to keep tabs on what the gang was doing back here. Well, I was able to do that through the app. It was fantastic. And while you're doing that, of course, listeners, you can hit that contact, that feedback button, and send us your questions, your comments. You can do it via email. You can do it via Facebook, via Twitter, even leave us a voicemail, all built, all baked right into the app right there for you. Really easy for you guys to make your voices, your questions, your comments heard on the old program. And speaking of this here program, I am joined by a rogues gallery of contributors, starting off with the man of many hats, none other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Alex, welcome back to the show, sir.
Good to be back. Welcome back, Mark. And it was good to be busy today on an up day. Today was another one of those days we used to talk about 2 or 3 months ago where 15 minutes before the close, I got to tear up all my notes. But today, at least, it was an up day, and it was busy. When I reached out to Grigas, he said, the desk was active, no real name standing out. Talked a little bit about Amazon, but today was busy across the board.
Yeah, I go away for a few days, and you guys get a whole mess of stuff to talk about while I'm gone. You get an actual sell-off. You get some actual movement in the underlying. At least when I come back, it's not too bad today. We have a bit of a retracement to the upside this time to talk about. So there's no shortage of things to talk about today as well. And also joining us from the great Option Pit HQ, none other than the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to the show, sir. Excellent job hosting last week.
Great. Thank you. I'm glad to be back. I tried to just, put it in at about 70% so that, you would still be able to keep your job. I hope I did my best.
I appreciate that. It's kind of fun switching chairs, isn't it? Because I know you like to talk, but when you're hosting, you have to talk a lot. And so it's a different beast entirely. Sometimes, even when you're not really ready to talk, you have to talk. So it's a fun challenge.
What I found more interesting was I had to pay attention to the whole show.
Yes, that also does test your patience. You can't sit there Skyping and IMing and chatting and everything else.
Exactly.
You have to actually listen.
Mm-hmm.
So it tests many muscles all at once.
Indeed.
And listeners, the Skype gods are not smiling on Uncle Mike Tosaw today, but we hope to get him back shortly. In the meantime, we're going to keep on rolling right on into our first segment. Yes, it's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block. This is, of course, the portion of the show we break down what was moving, what was going on, what was lighting up the old tape today. And like I mentioned last week, we had a bit of a sell-off last week where we got some of that back today. Most of the major indices closing up about 0.75 of a percentage point or so. The S&P closing up nearly 14 handles to about 1939 on the day or so. One tenth of a point away from that level, and all the other indices pretty much following suit on that level. VIX cash, of course, selling off to the downside, down about 2 handles, or nearly 12% to 1501. I'm sorry, just ticked up here on the day. So not a full retracement of that aggressive sell-off from last week, of course, sparked by Argentina and the Fed and a myriad of other issues all coming together at the same time, but we're getting a little bit of that back today. So we'll start in your neck of the woods there, Mr. Viceroy. You said you talked to Grigas. You saw a pretty broad activity across the board. What in particular caught your eye over there at OX today?
Well, one thing that John pointed out was Thursday and Friday, when you kind of had the mass exodus, volume had picked up, but he didn't perceive that the desk was seeing a lot of, I don't want to use the panic selling, I don't want to use that term, but he didn't see a lot of hurry up and get out, didn't have a lot of margin issues. We've talked a little bit lately about how portfolio margin has changed a little bit. So even with a 300-point move, I don't think it's stressed a lot of folks yet. But the activity today looked almost, again, I hate to use the term back to normal, but today was kind of back to normal. Our premium sellers were in selling premium, and there didn't seem to be a lot of index put buying or VIX call buying. In fact, throughout this whole thing, at least my view of it is VIX has overreacted, and I think that's more a testament to how thin trading is as opposed to lots of massive adjustments in the term structure. I've talked repeatedly about a client we have who trades the ratio of the S&P to the VIX and has got this metric of 10-to-1, and when it exceeds 10-to-1, how he adjusts. So, I started looking at that, but the VIX reaction, both today and in the sell-off days, were, in my view, out of proportion to the way the market was moving. So kind of interesting activity. And again, VIX looks like it's almost overcorrecting on the down days and certainly overcorrecting today on the up day.
The VIX not reflecting reality. Say it's not so, Alex. I refuse to believe you.
It's true. It's true.
Shocking things you say here on this program, sir. Well, speaking of VIX, Mark, I'm sure you guys had a lot of grist for the mill over there in the old option pit chat room over the past few sessions.
Yeah.
A lot of activity to analyze and digest, and not least of which being all the movements and adjustments we've seen out there in the VIX term structure. I know you talked about settlement last week being pretty crazy. What's caught your eye in the last few sessions since?
Well, despite the total implosion of VIX, they brought the VIX August down enough to keep VIX trading at a premium to VIX August. So the VIX cash settling in between the future and August SEP still points toward some belief that, we don't know where the VIX might go in the next couple of days. I tend to agree with Alex. I think for one 13-point rally to bring the VIX in 2 full handles, maybe a little bit much, but that said, I thought that the sell-off was a little overdrawn last week. And, VXST, speaking of VIXpocalypse, it's now trading back below the VIX cash, came in 1482. They absolutely blew that apart this morning. I don't know that was a smart move, but one interesting thing is that, it appears the vol was up a little bit on VXST where it was not in VIX. They took VVIX down some, but implied vol on VXST itself actually up a little bit today. So some weird action. The Dow was really a laggard, and the RUT ended up kind of being a leader, but I didn't see a lot of great reasons to be hopping on board here. I'll be more in tune with this VIX with us moving back to rallying. I think when I see one more day, or I see us break back through that 50-day moving average, one of the two.
Yeah, people being willing to crush VXST here, interesting, and they're not too scared or too reticent, given what we saw last week, to blast out some gamma, apparently. Open interest, surprisingly, given all the activity we've seen in the near term, not really as high as you might expect in a product like VXST, only hovering around 2,000, which is pretty much back where it was in the early days of the product. It had been averaging nearly 4,000 of late, so that's kind of surprising that it would come off as aggressively. People aren't taking advantage of what we saw last week to perhaps position again in VXST, so I'm still not sure what to make of this product and what people are using it for and what use case it's being adopted for. It's worth keeping an eye on, and this is certainly something we talk about on Vol Views every week as well, but still interesting. This past week has certainly been an ideal use case for a product like this, and yet hasn't really seemed to catch hold with the masses. All right, listeners, and we are joined by the magic of this technology you may have heard of, called the telephone, by none other than Uncle Mike Tosaw from RCM Asset Management, RCM Wealth Advisors. Uncle Mike, a lot of stuff going on over the past few weeks here, and certainly a lot going on today as well, as the market indeed retraces from some of those sell-off peaks of last week. So what caught your eye in today's big bullish upside move?
The big bullish upside move, I love it. We get 0.7% upside. It feels like everything's okay again. I being the eternal bull that I am, I think this is just a little bit of a retracement, and I'm not getting uberly bullish at this point right now. So, I closed off a couple of short puts that were profitable today, but I'm not selling any more of them until at least tomorrow. I'd like to actually see a little bit more of a downturn in the marketplace before I start adding more, keeping some powder dry, so to speak. I think that if we had the downturn with which as we had the downturn that we had last week, I'd like to see, I'm just looking at the S&P, I'd like to see us get over the 1950, 1960 mark again before I start getting too uberly bullish on this marketplace. I do think that we will over the course of the next few weeks, but for the time being, we might be in correction mode.
All right, good stuff from everybody as always. A lot of stuff to watch, a lot of stuff to keep an eye on. I think we'll do just that and keep on rolling right on into our next segment. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the old funky part of the show. This is the portion of the show where we break down the weird, the wild, the downright outrageous activity that's lighting up our collective tapes here in the old options market. Going to kick things off with a name I know you guys discussed a lot in my absence last week, but it was lighting it up again today, so we're going to dive back in. This is, of course, XLF, the old financial select spider. We talk about it quite a bit here on the old program. Closing today, $22.40, up nearly 1% on the day, like pretty much everything else in the market today. And you guys were talking about some interesting out-of-the-money trades last week. We saw some out-of-the-money trades going up again today as well, to the tune of December, this time a little bit farther down the old pike. In particular, it was the D's 25 calls that first caught our eye. Massive, massive closing trade going up this morning. The traders sold just a hair shy of 56,000 of these bad boys for about 75 cents on average. And then he turned around and bought on a ratio. He bought just about 13,936 to be precise, of the D's 24s. Also on for about 20 cents actually total on that. So selling out a D's 25 position, buying the D's 24 position on a ratio. Open interest reflects that, about 58,000 open on that D's 25 strike. So the lion's share of that open interest closing out right now, and then 14,000 piling in here on this one. This is probably a reflection of some near-term activity. This guy had a sizable long position on the D's 25s, probably not going his way and deciding to move it down a strike or two. What's interesting about this too is that him not deciding to really go for the gusto, but actually just keep a bit of a ratio on here. Did this one make it into your chat room today, Mr. Greasy Meatball?
Yeah, that was an interesting one, wasn't it? I was actually going through on these ones today, and I'll tell you, a few of these trades were a little funky today, don't you think?
Yeah, usually when we see a guy swinging for the fences with that kind of size, he'll reestablish on a similar level of size. Now, of course, when you adjust it on a pure premium basis, it comes out a little closer.
Yeah, my guess was this was a guy that got beat on his December call on his 25s and said fat to spending a lot more money, and but wanted to still kind of leave himself in a position where he could potentially make his money back if there's a real rally. Or it's some sort of hedge that they moved around. Who knows? Or he took off, maybe even took off part of his position on a sell-off if this was an upside hedge.
So fat, is that the technical term for that?
That is in fact the technical term.
Fed to that, I will reestablish it as a 3-to-1 or 4-to-1 ratio. Fat, I say. I like that.
Fat, indeed.
All right. A lot of action these days in XLFs. I'm sure we'll be talking about this one again in the very near future. Meantime, we're going to keep on rolling into a bit of a newcomer here for the old odd block. This is SM Energy Company, ticker symbol SM, go figure. Closing today, $80.74, up about $2.55, or about 3.5% or so. This is the name that does, on a given day, just shy of 1,000 contracts, doing a whopping 33,000 today. So just lighting it up over there in SM Energy. And what we saw in particular, and Tosaw, put your listening ears on this one, because I have a feeling you may have been lurking in good old SM Energy. And why do I say that, listeners? Well, because we saw a very rare stupid go up here in SM Energy. In fact, it was a time ratio put stupid, to be precise. We saw someone coming in buying 15,000 of the SEP 75 puts, so just a hair out of the money there, and a total of 20,000 actually on the day on open interest of just 50 contracts, so all opening paper. And then we also saw, on top of that, buying 10,000 of the nearer term AUG 80s. The spread went up with about 10,000 open on that AUG strike, so it's kind of hard to tell if off the bat if that's a closing portion on the AUG or if he's opening and establishing on both strikes. This is, again, listeners will have to play the home game, wait till we see the open interest numbers tomorrow to see how this shakes out. But very interesting. Don't see these stupids going up very often, let alone time stupids on the put side on a ratio. That's worthy of inclusion in the odd block in and of itself. So first off, Uncle Mike, why did you trade it on a ratio like this?
Well, I think what we need to do with this, if I were to do a trade like this, it would be maybe I didn't get filled in one way, shape, or form on another leg of it, or maybe I'm trying to leg something in overnight. So I think that maybe we ought to make a note of this one, Mark, and then see if there are any big trades for size come the show later in the week to see it, because I think this is chapter one in an ongoing saga that will be happening with this trade.
Oh, you think this is an ongoing saga here of the SM Energy time put stupid?
They put another 5,000 on after I wrote that up, Mark. I'm telling you, I think this is one of those stupids where it's actually synthetic strangle. It's mixed with a long stock position. That's my guess, just based on the behavior of the stock and the way the traders set up the trade, I think it's almost absolutely has to be mixed with stock. One thing a lot of people don't realize, most stupids are, if you mix a stupid with a one-up stock position, it turns into a strangle. So this is a way of a guy strangling without having to dump his stock for tax purposes.
We should mention the previous open interest there. That previous 10,000 lot went up very recently, July 30th. So all this trade coming together just in the past week or so. I agree with you, Uncle Mike. We'll have to keep an eye on this one to see.
I think it's I think that 10,000 that they added, then you mix that with the 20,000 in SEP, and now we've got a picture that's painted that adds up to 20,000 each. I'll bet you the guy is long. What does that cover? 2 million shares? I'll bet you the guy's long 3 or 4 million shares of this underlying. I'll bet you.
Interesting stuff. You don't really think of stupids in that use case, but it's about as good of a use case as any for a stupid. I know we maligned them.
Yeah, on a call position, you're right. A stupid, you don't think about it that way. But on puts, that's actually the first thing I usually think about in terms of a trade like that, especially when you see that kind of size. I don't know, Alex, what do you think?
I'm simply not sure. I don't want to go into the territory of speculating here. I don't know.
Well, so how often do you see the use case of using put stupids to convert like a long stock position into more of a strangle type position?
So more of a backspread position than a strangle, I think. I mean, are you talking about just owning both sides of the market and calling that the strangle? Because it can't.
Yeah, you're long. Imagine this: you're long a couple million shares of stock, then you're long an at the money. You're long one up an at the money put, and then one up the next put down. That really is kind of a. You're right. It's kind of a backspread, kind of a strangle position.
Yeah, and to your point, there might be a tax play in here as well, with someone not wanting to exit. Is the stock appreciated much in the last 6 or 7 months?
Yeah, I mean it's had a nice little run over the last. Well, it's down on the year. It's up nicely. It's up a little over 20%, and on a 2-year period, it's up close to 100%.
I need to search more, but it sounds to me like a pseudo backspread.
Yeah.
There you go, listeners. All sorts of ways to parse the stupid. Any of them viable, because the stupid, as you said many times on the show, an interesting, if somewhat dubious, strategy. When you set it up that way to begin with, I'm kind of with Tosaw. I can see the use case for when you're kind of legging into a spread that already has some momentum, and you're adding maybe a second strike because you want to double down for whatever reason, don't want to close out what you have. When you set it up from the outset that way, it's an interesting strategy, to say the least. This is one we'll definitely file in the to be watched category. Listeners will come back on a later show and tell you what we think is actually afoot out here in that name. Meanwhile, we're rolling on to another newcomer here in the old odd block. This is AmerisourceBergen Corp. I know, one of my favorites. Ticker symbol ABC, that much coveted ticker. Closing today, $77.79, up about 50 cents on the day today. And since we're talking about positions tied to stock, let's just dive right into it. We saw something similar going up here today. Not a put stupid, but calls with stock for some pretty serious size, actually. We saw the AUG 75s going up just a ridiculous amount of time, 40,000 to be precise here in ABC, paying $2.30 and then $2.35 on a couple of different exchanges. So bidding them up to get it all done. That's an open interest of about 7,000 contracts. So all opening paper. These are slightly in the money. Like I said, the stock closing today, nearly $78. These are nearly $3 in the money calls. And it was also done tied to stock. We have to see what the actual ratio was with the stock, but still interesting nonetheless. And that, of course, changes the narrative quite a bit from what you might initially assume of just gobbling up some in the money calls. Mr. Sebastian, what's your take here on these in the money ABC calls with some stock on the side?
Yeah, I wasn't 100% certain with the stock, but the way it was set up, it looked like there was some. It looked like the guy bought in timely fashion because the stock really ran since then. Is it AmerisourceBergen Corp? doesn't that even just sound kind of like a scam company? Even though it's not, all right? It's not. But if someone's like, hey, have you invested in AmerisourceBergen Corp? I would immediately be like, call the SEC, call FINRA, scam, even though I'm sure it's perfectly good. I believe they're a wholesale pharmaceutical. But anyway, yeah, it looked like somebody had a very timely purchase of some calls on this one. And more power to them.
Yeah, you're right. It does sound like someone's going to knock on my door from ABC at any moment and try to sell me some very wholesome, domestically sourced products that I can in turn sell to my neighbors for a great profit.
Or like magazines, maybe, something like that.
It's grit. It's grit for the modern era.
You should buy 3 years of Us Weekly from AmerisourceBergen for 40% off the cover price.
There we go. That's how I got the Options Insider ball rolling. Very little known secret there. ABC. That's the secret. All right. And moving on to our final name, our final victim here in the old odd block. This is another newcomer, I believe. This is NQ Mobile Inc. This is an ADR, listeners. Ticker symbol NQ, closing today $7 even. A bit of an aggressive day for NQ, closing up about 50 cents or nearly 7%. And what we saw today was pretty much a closing call roll. We saw rolling on out to the Jan 2015 expiration cycle. Saw some pretty sizable activity going up out there. In particular, the Jan 8s being closed out for $1.44. Trader buying about 42,000 of those on the day. So he's closing out his short there, listeners. Open interest of just a hair shy of 44,000 contracts on that strike, and then reestablishing one strike down 42,000 times for $1.80. So to repeat, listeners, buying back the 8s 42,000 times for $1.44, selling out the 7s 42,000 times for $1.80. Doing all that for a whopping 36 cents. An interesting trade. Sometimes we call these love your broker trades. A little bit more understandable in these smaller names where there aren't a lot of strikes available, but still an interesting, if sizable, trade here. What's your take, Mr. Meatball, on this sizable roll in NQ Mobile?
Sounds like somebody did a covered call, made some money on a sell-off, wanted to get some more premium into it, take some profits, and move on. So looks very much like a covered call play.
Yeah, it looks like he's taking some money off the table, so we can't fault him for that. Take a winner, take it off, reestablish.
Indeed.
I've seen worse trades in the history of the odd block.
Indeed.
Like we profiled perhaps one today. All right. And now it's time for us to keep on rolling right on into our next segment. It's time for the fancy hat block, a.k.a. the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It's time for the Viceroy to don his fanciest of fancy hatwear and proceed to give us our behind-the-scenes guided tour into the land known as OX by Charles Schwab. Mr. Viceroy, what was cooking over there at OX today?
So I'll do a quick express block with one kind of funny story. We had a little technical hiccup this morning in the Idea Hub. So ironically, all it showed in one of the tiles were the bullish ideas. And I got an email user who wanted to know if we were now beginning to only show the bullish ideas on the up days. So we would be right. But no, it was an event-filled day. If you looked at the individual stock names, a lot of stuff moving 2, 3, 4% today. Some people think of it as a reflex rally. Some people just think of it as an up day with volume moving back into a lot of the momentum names. Probably the biggest name that got any attention today was Amazon. It was not an overly active day in Apple. But, the stuff that trades here, when we get big moves, we see a lot of activity in the Netflixes, the price lines. And today you didn't see any of that. Today it was kind of more the mainstream issues. Good earnings on Berkshire today, popped stock $4. And I know for many people, because it's a $100 stock, it isn't much of an option stock. But today was just kind of a mainstream, nice rally day with not a lot of names really standing out.
And well timed on your part, sir, to only highlight the bullish trades on a day like today. That was some behind the scenes voodoo on your part, Alex. Don't be modest.
If we were that good.
But you mentioned something earlier I think is kind of interesting in the trading block. You said that a lot of your customers came back today and they're up to their old tricks, selling out of the money premium, et cetera. It's good to see because given the aggressive sell-off we saw last week, I know in years past, a lot of your customers playing in the very, very near term of the downside put spectrum, writing weeklies, et cetera. An event like that could have been catastrophic for some of them. Good to see that a lot of them are either using risk mitigated strategies or are still able to come in there and trade them up without having a lot of reticence after last week.
Yeah, and I think some of this is the fact that the street, including us, adjusted our parameters for portfolio margin, which meant that the accounts that had some pain last week didn't have as much pain as they could have had. The irony, I know I talked about this a lot, but there's been a lot of adjustment in risk. There was a big OCC meeting in New York City last week with the risk managers of the firms, and most of the firms have sort of expanded their risk parameters, which means they've taken some of the leverage out of the equation. And the irony of it, when you're the first person to do that on the street, you'll have a bunch of accounts disappear because they'll go somewhere else where the regulatory environment they believe is better. And then, of course, what happens in the week or two after is they trickle back because they realize that the regulatory environment on the street really doesn't have a lot of there isn't a lot of regulatory arbitrage to do anymore, which a year ago there was, but that's changed today. And those portfolio margin accounts and those heavily margin accounts have been asked to adjust, or as we said at some firms, they've been asked to pay an exposure fee, which I don't think is the popular or right way to do it. But that kind of changed the way the 400 points we lost last week impacted a lot of the accounts with a lot of short positions.
Yeah, it's a good point. Sometimes people don't like taking their medicine, for lack of a better word, but perhaps it helped to spare a few of them some costly errors or downturns last week. Good stuff. Thank you for that, Mr. Viceroy. And now it's time to keep on rolling right on into the Strat Block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it's Monday. That means it's time for some strategery here on the old program. We think we've made enough offerings to the Skype gods. We think the lines are holding steady out there in St. Charles, Illinois. So we think we have Uncle Mike back on the old Skype mothership and that his connection will hold for the duration of the show. Are you willing to give it a go, Uncle Mike?
Absolutely, as always.
All right, then take it away, sir. The strategy block is yours.
I want to dedicate the strategy block today to Andrew Giovinazzi, and the reason I'm doing that is because today is about doing stuff. Everyone knows me as the eternal bull of the show, so to speak, and I want to tell you, just kind of give you an update from last week as to what we're doing on some of these put spreads and how we've been working them over the course of the last week in a down market. So let's rewind to July 25th. July 25th is when we put on our most recent put spread. And to give you an idea of this, purpose of these put spreads is not just for the sake of doing put spreads in most of the accounts. It's usually part of a bigger puzzle. But nonetheless, I just want to go through how we can manage risk while being bullish and having the market going against us in a major way. On July 25th, I don't remember the exact time of day with which I got into the put spread, but it was one day after the all-time highs of the market. We had a gap down. So after all, markets come down a little bit. Let's sell some puts, right? So that's what we did. On July 25th, SPY, let's just use the number 197. The low of the day that day was 197.33, and that's the least favorable number for the illustration with which I'm about to give. Let's just assume that I got in at the absolute low on this. And so with that being the case, and the reason I'm using this as the least favorable number is because I want to illustrate how much we've lost in relation to the market itself. On that day, the put spread with which we put on was the August week 1, 196, 192 short put spread. We ended up getting 45 cents for that spread. So needless to say, as we all know, the next day, if you just look at an old chart, you can see the next day the market was relatively flat. And then, and that was July 25th. The following Monday was July 28th. We had a down day, but then the market eventually closed up. And then the following Tuesday is when there started to be blood in the streets. So with that being said, between the day with which we have put on that spread, assuming I just got in at the very low of the day, which I'm sure I didn't, but let's just assume that I did, 197.33, and the close of the day today, 193.89, that's going to come out to about a $3.50 loss in the marketplace, or in the overall underlying. So a $3.50 loss is what we're looking at this point. So with that, to kind of give you an idea of how with which I adjusted in all these positions, we go down, we touch close to around the 196 mark on July 30th. When we get down to the 196 mark or near it, what I did was I sold the 192 put, the hedge leg, for a slight loss, 7 cents. And what I did was I rolled into a calendar spread. I bought the August monthly 196 put. And so by doing that, I did change the position from being bullish to neutral. And it's something that I usually don't do too often, but I did as kind of like an overnight type of thing, just because of the fact that, well, I wanted to sleep overnight and wanted to have a lot less risk on the table. So with that, market stayed into a similar fashion. And then from there, what I ended up doing on July 31st was closing out the entire calendar spread. Now, at this stage, the market was down a little bit, and I actually could have gotten out of the whole thing for approximately a 10-cent loss, and I think I ended up getting out of everything, these 3 trades with which I made, for a 15-cent loss. And this is on July 31st, when the market was actually much lower than it is, not much lower, but it was lower than the close of today. So at that stage, what I did is being the eternal bull with which I am, I sold a 192, 187 put spread to continue to sell puts on the dip. Now, by doing that, I did that for a couple of reasons. Number one, I wanted to keep consistent with being the eternal bull with which I am. Reason number two, so far since July 25th, I'm down 10 cents and the market's down close to $4. And reason number three, we had a lot more implied volatility coming into the marketplace, and so I wanted to create a higher premium for that. Now, keep in mind, last week we did have unemployment, we did have the Fed speaking, and I was doing my best to try to not be too close for comfort during these numbers, and so I was very aware of all of these things that were happening during that time frame. So with that, going into last week, we were in the 192, 187 short put spread. We did come close to the 192 mark. We actually went through it on August 1st, last Friday. So what I did was I just rolled the 192 put down to the 190 put, and by doing that, I did pay a debit. And so now at this stage, what I've created is essentially a half position. Still bullish, but quite frankly, I didn't want to be 8 points away on the S&P from my short strike price on a credit spread going into a weekend after a week like we had last week. So I kind of cut my position in half by doing that roll. So going into today, we were in the 190 AUG week 2 put, short the AUG week 2 190 put, long the AUG week 2 187 put. And so what that did is that still gave us some bullish exposure, but at a significantly less amount of exposure because we have 2 less strike prices and we have a much greater cushion. Today at the market rally, I ended up closing out the AUG week 2 190 put for a profit of 69 cents. So with that, I still do have the AUG week 2 187 put on. And if we have a pullback tomorrow, I'll sell another put. If not, I'll just get out of it for 9 cents instead of 10 cents. I'm fine taking on the extra penny or two of risk for the overnight time decay, whatever it is. And so overall, what I want to let you know of with this, folks, is we have had about a $3.50 drop since the initiation of this trade. And with these put spreads with which we've been doing, going in, going out, doing this, doing that, all these different things for a variety of reasons as we go, we're down about 50 cents. Now, combine that with the fact that we also are long SPY and short some October 190 puts that we've been as kind of like the anchor leg of the hedge, we're doing okay with this. And I want to be honest with the viewers out there, or the listeners out there, in that you're not going to win every trade. But if you do stuff, if you manage risk, if you have a reason for managing risk, if you have an understanding of why you're managing risk, you can come out okay within a market like this. So next week, if I sell another put spread for 50 cents, which is my typical goal of what I try to make in a week, and the market only goes up 10 points, let's say, in the S&P, then I'm right back to where I started. What you need to avoid is if you're selling puts and you run into a market like this, you want to avoid being right 11 months in a row and then all of a sudden you lose all your profits for 3 years. I'm 1 week away from getting right back to where I started a week ago, and we've had a $3.50 downturn in the underlying. So not trying to brag about losses. Well, I guess I am trying to brag about losses and the fact that we preach, every good trader that I've ever met my entire life has always preached the importance of risk management. I know this is kind of hard to follow via audio. It's probably easier when you're looking at it visually in some way, shape, or form. But nonetheless, this is an illustration about how that can work. And that is the strategy block for today.
Well, in the spirit of Mr. Giovinazzi, I think he'd be very proud with the amount of stuff you are doing over there, Uncle Mike Tosaw.
Indeed.
But not to, all joking aside, listeners, that's a little bit of the difference there between an advisor who's just going to hedge you, an advisor who's actually going to go out of his way to do stuff to try to pay for that hedge and make it have the minimal amount of impact on your portfolio. And that's why we have a guy like Uncle Mike on the show, and that's why a lot of you guys are calling him up to see what he can do for you, because quite frankly, that's the guy you want out there. Not anyone could buy a put. I don't want to diminish that. I mean, there is skill involved in that. But anyone can go out and buy a stock for you and buy a put and then wash his hands of it and say you're done. And that's pretty much all you can expect from the lion's share of advisors out there who have any sort of options wherewithal. It takes the extra mile to really go and try to make that put have the least impact as possible on that portfolio. And that's what someone like Uncle Mike is doing. So well done, sir. Thanks for that.
Thank you.
All right, and now we're going to keep on rolling right on into our final segment. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, a lot of stuff still percolating on the whole old horizon here. Of course, a lot of macro events still on everybody's mind. The ceasefire going on over there in the Middle East and how that will play out in coming days, and a lot of other things. Are there more looming defaults? So the macro worries are ceaseless. On the domestic front, it's a little bit more predictable. We still have some earnings cycling onto the old calendar. In particular, tomorrow we have one of my old favorites, Activision, reporting after the bell on the 5th. They're closing today right around $22.50 or so. So well on the north side of that range. It's been trading for quite some time. I know a lot of you, including our old friend, Mr. Grigas, have also been diehard proponents and traders of Groupon. Well, Groupon reporting tomorrow as well. It seems like they may have had some news leak out today or something, because the stock was on a tear today, up 9% or nearly 60 cents to close just a hair north of $7 today. So maybe some of that earnings news has already leaked out. I haven't had a chance to check and see what the news was that was driving them north, but that's a heck of a pre-earnings move in any underlying. And then, of course, another big name, Disney. Sebastian's favorites reporting tomorrow as well. Also moving pretty aggressively today, up about 2.25% to close at 87.25. So still some big names to watch out there on the earnings front, in addition to all the fun macro stuff we have to keep an eye on. Uncle Mike, in addition to all that doing stuff, what else you keep an eye on for the rest of this week?
Not a lot. Yeah, just watching the markets at this point in time, basically staring at the numbers. Whenever we get to a market that is moving this choppy and doing these types of things, when the market does stuff, I have to do stuff. Hence the reason that's what I do.
Mark, what are you watching for the rest of this week, sir?
Yeah, I mean, I'm gonna be watching this VIX. I'm watching this term structure, see if things, how things roll, and how we move. Should be pretty interesting.
It's almost like you could devote an entire show to the vagaries of the VIX term structure. Oh, wait, we have.
Yeah.
Every Friday, Vol Views, check it out, listeners, comes out on Monday for you guys, where we record it there at the end of the week. Good stuff. If you want some more insight into that wacky thing known as the VIX term structure, that's the show for you. All right, and take us home. Mr. Viceroy, what are you watching for the rest of this week?
Looking at the sovereign debt, looking at the 10 years, looking at the our 10-year, the Italian 10-year, the Spanish 10-year, and the UK 10-year. And get this, they're all yielding almost the same. Our 10-year is 248. At the extreme is the Italian 10-year, which a year ago I think we would have thought would have been at 6 or 7 by now at 259. But it's amazing the alignment of the developed countries' debt. One other earnings I would add is another Andrew favorite. Zynga is this week. Stock's been battered lately, but an interesting earnings play coming also this week.
You're right. Zynga not looking too robust since the highs there back in April of, actually earlier back in February, of nearly $6. Do you know, Mark, is Andrew still playing out there? I know he was into some risk reversals out there.
Not right. I think in his personal account, I think he still does have some.
He still has some lingering positions. Hopefully not from back in that 5-6 handle range. Hopefully a little bit more recent than that.
Agreed.
All right, good stuff. And that is going to do it for this episode of the Option Block. It's good to be back. Good to be in the old hosting range. You guys all did an able job last week, but it's fun to be back in the old saddle again. It's amazing how much you miss it when you're off traveling. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you, the listener. Starting off with you this time, Mr. Viceroy, what's coming on the pike over there at OX Education?
Live event this Saturday at the Westin San Francisco, 3-quarter day event. Starts around 9 in the morning. Jimmy runs till early afternoon. But it's at the Westin San Francisco Airport. And if you can't make it to the Westin San Francisco Airport, just come to the site. The live event is simulcast. So you can be home with your hot chocolate, slippers, and Cavalier on your lap and have the same experience as if you were there in the audience. You can interact. You can ask questions. But that's the live event this Saturday. Another live event in Seattle coming up. We'll talk about that later in the week. And then 2 webinars this week. On Wednesday, Mike Zaremski runs our futures desk. He's going to talk about trading futures and the features of the OX platform. Maybe Mike will get into Idea Hub for futures. And then also on Wednesday, Peter Lusk from the SIBO Options Institute is going to stop by and do a webinar on trading weeklies. Right now, I don't think there is more of a popular topic than trading weeklies in the option community. So that's what's coming up.
I have a quick question for you, Alex. August, a little bit warm for me for the hot chocolate. Can I dial in with some iced tea perhaps instead?
By all means.
Okay, then I just wanted to check. I know a lot of our listeners at home are wondering about these pressing issues as well. So thank you for clarifying that, sir. Speaking of webinars, Mr. Sebastian, what do you guys have cooking over there in the land of the pit?
Well, we still got the boot camp coming up. It's coming up on a week from Wednesday. Use code INSIDER to take 20% off. So be there or be square, as they say.
The savings never end over there at the pit. It's a veritable Black Friday in July/August sale. Impressive stuff.
That's what I said. That is exactly what I just said.
The deals never stop. Listeners, get them while they're hot.
Get them while they're hot is right.
And last but certainly not least, Mr. Uncle Mike Tosaw, what's coming down the pike over there in the land of RCM?
Well, for now, just like I know I've been talking about the advertising to the $500 a month style investor, holding off on that for now. We're still trying to catch up on the last batch with which we got in, but we're getting closer. But nonetheless, continue to visit our website, rcmfutures.com and rcmwealthadvisors.com. Sign up for our newsletters, and that's what we have going on.
Great stuff, listeners. And on behalf of the Viceroy and Uncle Mike and the Greasy Meatball, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, for downloading the app, and of course for sending in such great questions. Keep them coming. We're going to have a mail block palooza on the Thursday show, so stay tuned for that, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.